I'm going to do a real quick video on Afterpay and a potential bounce for tomorrow. Now, people are panicking. They're going, what's the bottom? There is no bottom. It's the end of APT. $5, here we come. Basically, people are freaking out, and this is absolutely beautiful. If you're someone like me and you want to trade a blue chip that's absolutely tanking, this is exactly what you want to see. Good God, I can't tell you how excited I am to get into Afterpay. Now, this is for a trade, by the way, not for a hold. So what we have here is Afterpay. Let's go through the technicals real quick. From very bottom to very top, we've got a 78.6 target here of $10.85. Now, if we learned anything from my video yesterday on Qantas, is that the volatility is high, it'll dip down. So we had a relatively decent sized stop loss for Qantas. I think it was about a little over 10%, 11% I think it was. And it came relatively close. I think it was, so we had a really big entry at $2.40 and a stop loss at $2.20. The price of Qantas hit $2.26. So it came within 6 pips of getting stopped out. So I think it is perfectly fine, if I close Steam, perfectly fine to have an entry, perhaps $10.89 at the 78.6. And then we have another much larger entry. So perhaps put 30% at this $10.89 and have a much larger position at $10.36. So perhaps 70% of your total position at $10.36, $10.37, and 30% at $10.90-ish. And you'd want to have a stop loss just below $10, maybe $9.90. Now, the thing with the $10 range, it's kind of like the $1 target. It's very similar in that it's a bit of a magnet when it comes to technical analysis. It's a big psychological range. Sometimes it likes to just whip below the $10 just a little bit, just to test people out, and then it'll just whip back up. I don't think we'll see that happen. I'm not confident we'll see a dip below $10 exactly, purely because the horizontals are so strong here at $10.89. And of course, we've got the very bottom here, and it's a fib level. So I don't think we're really going to see, if you set your stop loss, if you've got the risk tolerance, put your stop loss at $9.50 if you really can handle that much of a stop. Anything below $9.50 would just be absolutely ugly. There shouldn't be a reason why it dips that far. But again, volatility, we saw it with Qantas, and we were correct on that call. So that would be my prediction. Again, 30% at $10.89 roughly, and 70% at $10.30. Now, the fundamentals. Let's go over the fundamentals. Now, people call Afterpay a loss-making business, which is hilarious. I don't know why people do that. I think it's just an inability to read a basic financial document. It's, people scroll up to the top, and we're on page 21, I think it was. So if we scroll up and we go to maybe type in revenues, revenue, we'll see something like, well, hell, I don't even know where people get this negative revenue from. It's somewhere in the document. They're in the negative somewhere. I think it's here. Yeah, total income, and then they'll look at this loss after tax, loss before tax. So this is where they're getting this 31 million, 35 million loss number from. But that's a really simplistic view of the business. Now let's go through purely the asset, and let's factor in the market cap at the moment, roughly $5 billion at $12.55. Keep that in mind, $5 billion. Now we have a company that, if we go to page 20, we have gross profit of $164 million. And this is for the half year, right? This is half year. We could safely double this number, and that's their full year profits of about $320 million. I don't want to dive too deep into it. I just want to do a really quick overview. So we scroll down and we see total assets, $1.3 billion. They've almost doubled their assets in a year. Keep that in mind. In a half year, they've almost doubled their assets. Not even a full year. In a half year, they've almost doubled their assets. You've got 1.3 billion in assets. You've got 100 million in liabilities, right? Now we have a total equity, $840 million. That's just equity. That's just what we have at the moment. This is if everything shut down shop right now, Afterpay would have roughly $840 million in equity. And then, of course, if we look at profit, what was it, $300 million? And then revenue. Well, revenue is a little bit funny for this company because their margins are quite low compared to other companies. So other companies, you know, your traditional brick and mortar store would target anywhere from 25 to 30% margins for their product. Afterpay is a lot lower because it's basically loaning out money and they'll take a very small percentage as profit for late fees and things like that. So less than 1%, I think it was. So revenues, you can't really multiply revenues in Afterpay and really put out a number there. So we got to look at gross profit. So we know how much money these guys are making. At least we've got an income number and then cost of sales. So we got a profit of 164 million. Now, typically you'd multiply a revenue by 3. And that would be your stock standard market cap target, right? You'd be targeting 3x revenue, and that'll give you an idea of what the company's worth, plus cash backing, and maybe assets as well on top of that. Afterpay's a little bit different. Actually, it's very different because the revenues are just through the goddamn roof. But the revenues don't really translate to 30% margin, obviously. So we've got significantly less margin. We've got to factor in that we're still pulling in $300 million of gross profit. Now, yes, COVID-19 is going to impact sales. People aren't shopping as much. What the impact of that is, I don't really know. But we have 1.3 billion in assets, plus we have historical profits. Let's say, even if we half this number, let's say we go back to this number here, 86 million. That's still an extremely healthy position to be in. Like, make no doubt about that, that is a very healthy position to be in, particularly in these economic circumstances. Now, do I know the impact of COVID-19? No, I don't know the financial impact. I don't know how that impacts sales. I do go around the shopping mall, I can see less people in the shops. It's clear as day. But is that going to last all year round? No, I don't think so. I don't think people are going to stop shopping for the rest of the year. So keep that in mind when we drop another, what is it? So if we drop from, it's not exactly 20%. So if we drop from $12 and, sorry, what was the share price at the moment? $12.50 at the moment. So $12.50, and we want a $10.89 target roughly. So we're dropping by 12, just about 13%. So we multiply that by basically what's a flat $5 billion. So we lose 644 million from our current market cap. So minus that by 5, and we'll sit at about $4.3 billion. $4.3 billion for $10.89. Maybe it can drop a little bit further. 4.3 billion for was it 4.3 or 4.5? Jeez, I already forgot. Anyway, let's say it was 4.5. And we've got a business that has 1.3 billion in assets, right? So a quarter of the market cap already is going to be in assets, more than quarter. And then we have $300 million historically, which let's say even at half is going to be pure profit. You tell me, is that worth $4.5 billion? To me, it sounds incredibly oversold. There is this story, again, there is the story that Afterpay is a loss-making business and that this is what's causing this enormous drop. Again, we just went through the financials. Where is it? Their assets are growing. How can you double your assets if you're a loss-making business? How can you, let me rephrase that. How can you double your assets while reducing liabilities? How can you increase net assets and equity? How can you increase equity if you're a loss-making business? Right? That is the most common sense way to look at this stock. Now, from a purely technical analysis perspective, this is perfect. $10.89 is perfect. With, of course, some leeway. And the fundamentals behind it, I think it's perfectly sound. I think it's absolutely perfectly sound to pick up Afterpay at this price range for a short-term bounce. And as usual, I would consider this $17 target, or the 61.8% fib target, to be where you sell. $10.89 to $17.35, that's not quite 70%. $60%. 60% profit target. It may be worth something considering. I'll definitely be putting in an order.